Hi, I'm Francis Hellier, and welcome to my brand new podcast, Metaverse. This is a podcast for the future-minded, a series for anyone on the hunt for the next big thing and all its possibilities and implications. This is Tomorrow's World Today. With each episode, I will chat to those at the top of their fields, from futurists in crypto and space travel to forecasters in business and tech. Together, we will ask the question, what's next? Today, I'm joined by Daniel Coheur, co-founder and chief commercial officer at Tokeny Solutions. Founded in 2017, the Luxembourg-based company currently works with over 40 clients within the private market to advise them on how to benefit from adopting blockchain technology. Their mission is to increase business efficiency, enforce global compliance obligations, automation, and competitive advantage. And this year, they were voted number one in Luxembourg's top fintech startups. Before this, Daniel worked for a variety of different companies across the startup and tech sectors, such as Melio and Cineverse Technologies. Daniel, it's brilliant to have you on the show.
Likewise, Francis. It's a pleasure to be there today.
So can you give us a bit of background on Tokeny Solutions?
Sure. Actually, it all started with a friend relationship. Actually, I was a coach and a mentor in an incubator in Paris called Startup 42. And I was welcoming startups in this program, and we were providing background in various fields to support those startups to be successful. So we incubated around 50 projects, and one of them was a project led by a fellow called Luc Valentin, who's currently the CEO of Tokeny. And his idea was to build marketplaces for e-commerce company. So we selected this company, we funded this company, and after 7 years of successful development, amongst his customers, you get, for example, Vente Privée in France, which is one of the largest e-commerce company in Europe. He approached me with this idea of leveraging his expertise in building e-commerce platform, but to serve a totally new market that was called ICO, utility token offering. So for me, it was a total discovery. I was familiar a little bit with the crypto because I did invest in another company that was mining crypto as well, but I was not too familiar with the utility tokens. This was the starting point of our conversation. And very quickly, I realized that there was a bigger picture relating to enabling this the blockchain to become the future infrastructure for the financial ecosystem. So I invested in Tokeny, and I've been supporting Luc for about a year as an advisor. And then once we closed the funding round with Euronext, who's now a reference shareholder, I was asked to join the team and bring a little bit of gray hair. I had plenty of that in the company, in the management team, and help the business development, which I've been doing now for a bit more than 2 years.
Amazing. So can you give us a little bit of an overview as to how digital assets operate in the real world?
Sure. Well, maybe I should start to explain a big difference between how blockchain like Bitcoin, for example, are operating. Bitcoin is a non-permission blockchain. It's a permissionless blockchain. That means that if I'm sending you a Bitcoin, you'll receive that Bitcoin. Ethereum is working on the same principle. Of course, you've seen probably the development of what we call smart contracts. Those are not smart and those are not contracts. This is just a way to program conditions. And the first condition that was programmed was delivery versus payment. So I will deliver this utility token if I get the money, right? Which is, in essence, one of the key characteristic of financial markets is this notion of delivery versus payment, which is usually managed by companies that are taking and managing this counterparty risk, such as central security depository. So, but obviously in finance, you have far more conditions than just delivery versus payment and managing this counterparty risk. If you look at financial instruments, there are rules applying to those instruments in the country of issuance. There are specific rules applying to the type of instruments as well. So we needed to develop a solution that was enabling to enforce those rules and conditions so that this technology could be used to serve indeed financial instruments. So this is how we came up with this standard, which is called the TREX, Token for Regulated Exchange. In essence, what it does, it's simply replacing the transfer function that you see on an ERC20, which is a standard that we use, which is permissionless. So similarly to the blockchain, if I'm sending you an ERC20 token, you will receive it, which of course could be problematic. If you take, for example, what has been happening in Venezuela, you may have heard that they launched this Petro token, and it was forbidden for US residents to have those tokens in their wallets. That means that if I was sending you this token as a US resident, you would be infringing the law, right? So, and that highlights the risk of a permissionless blockchain. So we came with this notion of replacing the transfer function of the ERC20 and replacing that with a TRX, which has opened up obviously the awful lot of opportunity, because now we can service any type of assets in any type of legislation and with any form of regulation.
Now, talking of legislation and areas of the world where you operate, obviously founded in Luxembourg, but the government of Monaco has recently selected Tokeny Solutions as its technology provider, and to do exactly that, the issuance of tokenized financial instruments. That's a fantastic opportunity. Can you tell us a little bit more about that?
Yeah, sure. So I think what is very specific when you use token is the opportunity for those tokens to be transferred in the secondary market. And you're probably familiar, in Monaco, the only company for which you can freely transfer shares are what we call SAM, S-A-M. And those companies also are quite complex to incorporate. They are a little bit the jewel of the company in Monaco, right? So it was a concern for the government to enable those security token offering to be done through this vehicle being a SAM, and then to have secondary trading transaction taking place on those shares that would potentially end up having shares in the hands of people that you may not want to have, that could be blacklisted, that could be PEP, any form of restriction that could apply to the holding of those securities. So it was a requisite, a very important requisite for the government to be able to control those transfers and to make sure that they had full visibility on the holders of those tokens, which ultimately would be also holding shares in SAM. So we have, on the top of the TRX, we have developed a solution that enables to identify market participants on the blockchain. There's this wrong understanding very often that because you work on a public blockchain, for example, that the information is freely available, which is not true, obviously. But that is true as well, that the way that people are identifying themselves now on the blockchain is through the use of what we call a wallet. And a wallet is a long list of figures and numbers, obviously, that do not correlate necessarily with the identity of a person. So we felt that it was something that was needed in the market to be capable of identifying people, of performing KYC on those people, and also because you know those people, you know their country of residence, to enable and enforce the rules applying to those financial instruments. If, for instance, and this is probably a very obvious example, but if this security is not accessible from someone in North Korea, which in any case will not be accessible, you want to make sure that you enforce that restriction. And you need therefore to link that permission blockchain with an identity system that enables to identify the country of residence or any form of restriction that could apply to investors. You probably heard the notion of qualified investors. So investors that are supposed to be well informed. So you need to be able to identify also those investors. So all this complexity is something that was paramount for the Monaco government. And as we had already built that solution, it was quite convenient for the government at that time to be able to leverage that technology in order to provide the level of security that the Monaco government was looking for in order to launch this project in Monaco.
And your company allows clients to interact through the blockchain without any need for any tech experience or knowledge. How is that possible?
Well, I guess by investing around 10 million in 3 years, that's what we've been doing for the last 3 years. I totally agree with you. I think that the key for this market to grow, to become a mass market, is to stop using acronyms referring to wallets, referring to tokens, to standards. You know, when you use the internet today and you use email, it is relevant for you what protocol is being used. You may come across SMTP and that type of acronym when you migrated your inbox to another laptop, and then suddenly you have that pop-up window asking you to reconfigure your inbox. But other than that, normally this is totally transparent for you. And I think that this is the future of the industry, is to really stop using those acronyms and make the technology as transparent as possible. So the mission there of Tokeny is really to provide the tools and services that enable to interact on the blockchain, indeed without having a knowledge on how the technology works.
Do you think that the public's knowledge of Bitcoin and cryptocurrency somehow distracts from the benefits long-term of blockchain?
It's a new technology. Like any new technology, you have people, early adopters that are familiar with the technology and that make advantage of it. I think that there are a lot of people that have been mining Bitcoin a couple of years ago that you can probably see them around the casino parading in nice cars. So I think that this is, of course, associated with the level of risk that those people have been taking at certain point of time. I think that now the adoption of blockchain, and more specifically certain crypto assets, is bringing more visibility towards the general public, and therefore it's making it more easy for those people to start investing and considering, potentially, having a portfolio distributed around various cryptocurrencies, and then they are free to assume the risk of doing that. There is definitely a lack of general education. There is still misunderstanding of what the blockchain is, the risk associated with using the blockchain, what it means. But this is like, for every new technology, there is a learning curve that the public has to go through in order to fully understand what they're getting into.
Daniel, do you have any involvement or interest in NFTs? And how does this compare to the information you've been describing here?
It's very interesting. I think that if you look at any new technology that is really cutting edge, you always find people that are trying to abuse it, if I may say so. So I think that there are probably a lot of, I wouldn't say market manipulation, but a lot of people are trying to promote the technology as a game changer for basic, I would say, operations. And this has led to a lot of speculation around, those early NFTs and those first digital art that has been published using NFTs. I'm not so sure about, if this is a bubble or not. What I do recognize, though, is that there is indeed a need to enable digital right owners to collect the revenue associated with their artwork. And I'm pretty sure that how I see NFT evaluating is by using the technology for what it is, so a way to register your rights and make sure that when your artwork is being used, then you collect your payment, or what you're entitled to for that usage. And this is something that is really needed in the digital ecosystem. I mean, think about Spotify and others. I think that there again, the way that copyrights today are enforced and how revenue are collected for artists is still very old-fashioned. I happen to be working or investing in a company that was developing solution for the music industry. So this is an industry I know quite well. And obviously, if you are not a top artist, then you don't really get much money. So I think that there is a need in order to enforce some traceability, and NFT technology from that regards perfectly serve that market. So now on the speculative side of this, it's hard to say. What I can say, though, is that if you look at how this business has been developing, first, you had Bitcoin that were worth nothing and that suddenly became worth a lot. And then you had those ICO, utility token, that were meant indeed to fund decentralized projects. And very quickly, all those decentralized projects have been served. And then you start seeing a development of secondary market. And there was billions of dollars that were invested in that economy. And then the market was looking for something else, how to invest and continue gambling and speculating, right? So we saw a little bit STO coming up, security token offering, but it was not speculative enough, because at the end of the day, security token were noble companies that wanted to, fund their development through the issuance of another form of financial instruments. So the market was looking for something else. So in my view, NFT is that, well, in between you have decentralized finance. That you can get interest on your Bitcoin. You can stake your Ethereum and get quite significant interest by doing that. And then NFT appeared, and then you've seen a very high speculative wave behind NFTs. So you cannot prevent those speculative movement from happening. And it's true that a lot of people have been making a lot of money, but a lot of people have been losing a lot of money as well. Now, as I said, and even if I look at Bitcoin or utility token, because without utility token, we wouldn't have a security token, at the end of the day, those smart contracts that were developed, invented by Andreas Vogelsteller, that came with this notion of the RC20, led us to implement the same type of principle for security tokens. So from all those early stage technology development, we have used it to broaden it a specific use case that is serving a market at large. So is it a good thing or a bad thing, this speculative wave around NFT? I don't know. All I can say is that I'm pretty sure that the market will bounce on that and will use the technology to serve greater purposes.
I read someone said that Web 2.0 is buying things online, and then Web 3.0 is buying online things. So maybe we'll see how far that develops. How important is blockchain going to be for companies of all different stripes? And are those early adopters at a significant advantage?
Well, I guess it's very much asking me 20 years ago if the internet would be relevant in the future, right? I think that the blockchain will change the way that we do business, that we deal with information, that we transfer value. There's no doubt about that. So this is something that will have fundamental impact for the future. If you look at finance, for example, now you have the opportunity to work on an infrastructure where everybody shares the same information. So think about it. Look at how banks have been evolving over time. You know, a banking system, IT system, was developed to be as secure as possible, not to share information. So all those banking systems have been developed in silos to be as secure as possible. So when you transfer value from one bank to the other, you have a lot of intermediaries, name them cash correspondents, central security depository, custodian, etc., that are just there to make sure that the information or the value is properly transferred and to guarantee the integrity of that value, right? Now with the blockchain, all this disappears because everybody works on the same ledger, everybody works on the same architecture. So, and especially so in finance, it's not like, regretfully, if you look at, we are in the South, so if you look at the Carlton in Cannes, they, because of the COVID, they close it down and then they can refurbish it and make an even greater hotel. But you cannot do that with the financial world. You cannot say, guys, I'm closing your account, come back in 3 years from now, and you will have a brand new infrastructure. So, so this definitely is going to impact dramatically the world of finance. And there is even something bigger that is happening now, which is the digitalization of the financial ecosystem. Blockchain is obviously the infrastructure that is used for digitalization, but there was a need indeed to move this back office of finance into a new architecture, into a new technology. If you look at banking application for Revolut or others, actually they are not revolutionizing finance. They are just changing the user experience. They provide you an interface where it's more convenient, to see your accounts and make transfer. But behind the scene, this is still the old back office of finance with the cost associated with it and the inefficiency associated with it. So you needed something bigger, and this is really what the blockchain is. That is for the world of finance, but you can apply that to any type of activity. Look at trade finance, for example, sending commodities around the world. Look, we have another project now associated with ESG as a means to use the blockchain to track ESG commitments, make them visible to counterparty, to make sure that, especially when it is about ESG, it's about making an investment that is meaningful for you. You want to make sure that if you invest in something that is supposed to be green, it is truly green. So you will be capable as an investor to access that information on the blockchain, see that it is there, it is immutable, it has been checked, verified. And you have the full confidence then that the investment that you've been making and the commitment that those people have been making towards you have been met.
You touched on governments. What sort of role should governments be having in creating policy and guidelines around crypto and blockchain? And how much do we at risk of those banks and governments trying to centralize when the whole notion is about decentralization?
Well, in technology, there is a say it's better to have for forgiveness than permission, right? This is always how technology has been developing. And now, what I do see here is the financial world is not, usually all the regulator associated with those financial world are usually not fast forward movers, right? They tend to wait and make sure that, they understand the impact. What is surprising with this technology is that in just a few months, we've seen regulators implementing change into their regulations. Look at Luxembourg, for example. Luxembourg was already very agnostic in how you potentially could keep your shares. So you could use Excel or blank sheet of paper or whatever database. Now they've updated their legislation to reflect that the blockchain is a suitable infrastructure to maintain your shares. And they've done that just in a few months. Now, at EU level, there's this new EU directive for market infrastructure, MiCA, that foresee to have a digital CSD, which is essential to operate in the world of finance, because as I mentioned earlier, those CSD are there to manage the counterparty risk. Obviously, on the blockchain, you don't have that counterparty risk anymore because those transactions, as I was referring to earlier, to smart contract, are programming the conditions. So if I don't deliver, I will not get paid. So you program that, so you're sure it's going to happen. But in the traditional finance, since we didn't have such a certainty, we had CSD, which is adding a lot of complexity and cost in the equation. So the EU has already started to draft, a new directive to enable a sandbox for those digital CSD. This will be a long sandbox, but nevertheless, they've done that in the UK already last year, and there are already numbers of companies operating in the sandbox. And operating the sandbox means that you operate under the control of the regulator, but you do operate in production, in full commercial production. So this is amazing how the market has been evolving. So of course, small nation has always been fast to act because this is how they keep developing solutions to protect the economy and build on an opportunities approach. You've seen Malta doing it for ICOs. You've seen Switzerland, Liechtenstein, but now you see Germany, for example, that is now recognizing blockchain, is recognizing Bitcoin, is recognizing security tokens as suitable financial instruments. So this is moving extremely fast. So, and I've never seen regulator moving that fast. Now, of course, there is a missing piece in the equation. This is obviously a digital euro. That is a bit more sensitive, obviously. You've seen the attempt of Facebook with Libra, although you already have digital dollar, and you have also digital euro, not largely used, but already exists. Now, of course, there's not such a central bank euro, but if you see what's happening in China, and obviously there are also initiatives that are starting to be deployed in Canada and other countries, this is going to happen very, very fast and very soon. So once you have a major government that is implementing such a currency, then the other will follow because they will not be in a position to let another digital coin take the lead and become the future US dollar of the world, right? So this is probably the missing piece, but once this is being implemented, and we know this is being implemented because at Tokeny level, we have been implementing some proof of concept with a very large commercial bank in France, for instance. So we know that by next year, there will be digital euro commercial bank money, not of course to use your digital euro to buy your bread, but you will be able to use this digital euro to settle financial transactions. So that will be the trigger of something much bigger that will then follow.
When we consider blockchain or crypto, which other companies and industries do you think will be likely disrupted in the next few years?
Well, quoting Horowitz, he said, anything that can be digitalized will be digitalized. So anything that be represented on the blockchain will be represented on the blockchain. So, but I do believe that I tend to be a bit more cautious, because it's more an evolution than a revolution. Like if you take the example of custodians, so custodians are the one that are keeping your securities and guarantee the integrity of your securities. So, yeah, of course, custodians are not operating as they used to operate. When I started my career in finance and clearing banking in Luxembourg, I remember we had the central, when we were doing a Eurobond issuance, we had the central nodes and we had someone from the brink that was coming, and that was taking this central node representing $1 billion and carrying it to the Central Bank of Luxembourg. And it was in the vault of the Central Bank in Luxembourg. Now, of course, this has disappeared because everything is dematerialized already. So the role of the custodian has already evolved. Now, of course, on the blockchain, you don't have the security in the vault anymore. Those securities now will be dematerialized on the blockchain. So the role of the custodian will evolve. It will not keep the securities anymore, but it will be there to guarantee the integrity. And the integrity is by enabling you to recover your private key. So the way for you to identify yourself as the owner of the security. So I think that all those roles will evolve, will change. Now, of course, it will be their challenge to make sure that they are still in the position to preserve some of the value that they've built over years. But let's face it, the way custodian works today is by charging a percentage of the asset under management that was supposed to be in that vault. Now the asset will be on the blockchain. How can you justify again that you charge a percentage of that asset when you don't do it anymore? So business model will change, role will evolve. And I think that we need to see a bit of innovation in those big companies. Usually they are extremely afraid of moving fast, being the first movers when it relates to technology, because this is, especially here, when we talk about replacing infrastructure, this is major changes for those institutions. But when you see, for example, a company like State Street that have now moved, one of the top person in the organization, Nadine Ashkar, to a position of responsible for all the blockchain activity, and we heard that they are hiring quite a very large numbers of people to staff their department. Well, you can think that those companies will really soon step in and make announcement about their plans and how they see that infrastructure changing their business.
So you're advocating a chief blockchain officer?
I think there will be a lot of openings soon.
Daniel, I always love chatting to you because you have such an encyclopedic mind about this space. Have you always been a forward thinker?
Well, usually I'm not. I have people that are forward thinker. I'm just, a good executor. So I think that I've always had the luck to have smart people surrounding me, and those are the ones coming with the idea. And I like to run when I get excited by new ideas. So I'm more like a type of project management person. So I like to organize, structure, and see how we could build a future based on those technology. I think it's exciting because it's extremely stimulating, especially if we take the example of blockchain. I remember when I again started my career at Clearstream. I was 23. I was just graduated, and I remember I was invited at that time by the CEO of the company. He was a Swiss guy called André Lucie, and he was receiving us in a building called the Villa. It was very old-fashioned, very impressive. And every month he was inviting the newcomers for a breakfast. And I remember I was there in front of God himself, and I didn't know what to say in front of him. I was like, I felt so stupid. And then let's say 25, 30 years after that, we are now discussing with those companies and explaining how this technology will change the business. And this is really what I like in business, actually, is to be moving from, you are there, being a grain of sand in this old industry, and suddenly you are pivotal to change that industry. So this is very exciting.
So what's next for you personally, Daniel?
Well, obviously, there is still a long road to build Tokeny and make it a reference in the industry. Obviously, my connection now with Monaco has been growing since last year, since September. And I think that we have been working very closely with the government. I'm extremely impressed by the quality of people that we are meeting here in Monaco at the government, in companies, people like you and other like-minded people. I think that it is very interesting here because this is indeed a microcosm where it's quite easy to meet people, to meet a lot of people. And it's quite, I wouldn't say easy, but you can change things here. So we are still debating with the government how we are going to use this legislation in order to create something that is impactful for the principality. There are numbers of opportunities that we are assessing now. Of course, the government will decide whether there's a role for me and for Tokeny in that big picture. If there is, we would be delighted, of course. But we are already extremely thankful for being here and for having received this opportunity to provide our technology and to assist the government with that mission. So it has been already an amazing road. So, but I'm a very optimistic person, so I'm pretty sure that there will be more challenges and opportunity ahead of us.
Well, Daniel, congratulations. I think it's a huge feat, and I wish you all the best for the future. Thank you so much for your time today. Thank you very much, Francis. It has been a pleasure. You've been listening to Metaverse with me, Francis Hellier. Thank you to my guest, Daniel Coheur, for a brilliant conversation. Tweet us at MetaversePod for any suggestions or feedback. And if you enjoyed the podcast, please share a link on social media. You can sign up to receive an email when the next episode drops at our website, metaverse.com.